Good afternoon. This is Jeff Scott. This is Sunday, June 11th, 2017, and this is my top-down review. Entitled today Tech Wreck, One Day Wonder or something more. We'll try and make a educated guess on that and I'll let you know how I'm going to trade that question. Lower left-hand corner, you can see the big guy, that's me, and the little woman, that's my wife. We're out here at Acadia National Park outside Bar Harbor, Maine. Didn't plan on doing this, frankly, when I left. And my regular computer, I always bring two computers. One's a very lightweight computer as a backup. Well, my regular computer, which is a brand new Lenovo ThinkPad, died. So I'm using my lightweight backup computer for this presentation. But you can get an idea of how beautiful the coast is here. And thought I'd take a few minutes this Sunday afternoon and give you my thoughts. Disclaimer, this is for educational purposes only and recognition of the spirit of education, not investment advice. I'm a doctor, not a broker. I am truly independent. Nobody pays me anything. I don't have a business of selling you anything. Anything I use are things that I paid for. Anything I tell you reflect my bias, but not anybody asking me to say something. And trading involves risk, and you and you alone are solely responsible for any investment decisions you make. One other aside, since I'm using my lightweight computer, I don't have any idea how good the volume is. I know the volume is being recorded, but I don't have my outside microphones either. I always like to start by talking about Be Your Own Guru, the words of wisdom from Ian Woodward in the upper left-hand corner. Ian is where I really learned most of my early parts of my trading. Ian was a student of O'Neill and Cancelim, Morales and Catcher. Gil actually spoke at a number of Ian's meetings, worked for O'Neill and improved upon it. Ron Brown here was Ian's partner, or is and now he's alone since we lost Ian about a year ago. They took HGSI to the computer and also, I believe, improved it and added some funny names. This is George Lee. Up here is my buddy John Person. I started as a customer. He's a teacher, mentor, software developer, trader. We've become close friends. Great guy. He's got some great tools that I used to take my Cancelim from a how to find the stocks to John stuff to when to trade them, how to trade them. Van Tharp, guru position size and money management. And then a lot of people ask me, is there a way to do this easier? And Guy Cohn in the lower right-hand corner has got a number of sites, optioneasy.com, flagtrader.com. Actually finds a lot of the same stocks I find, has a unique indicator called the OVI. And I find him to be a nice complement to my trading. And for those that are looking for a lot of help, he's got some great education. And I think his tools are really made for somebody who is looking for more assistance. What I need at a desert isle, I have a lot of programs. I purposely hide my desktop so we don't have to talk about them. But I use all TradeStation, Thinkorswim, and Genesis. HGSI is my analytics program. EdgeRater automates some things that I do every day. I do follow seasonality when it makes sense, and I use a number of different websites. Speaking of websites, here's HGSI. Again, I'm totally independent. I make nothing if you buy this. My email address is because I've done a lot of customer support, my hgsidoc@gmail.com. Again, I am a doc, I'm an oncologist, but it doesn't reflect anything besides friends and family. And I hope to see some things come out in July, which will be a result of my friends and family. I do call up the proprietor from time to time when I have an indicator I want to change or add. And I've been promised in July, one of the things I've asked for will be coming out. But a couple things about the website. When I say free 30-day trial, it doesn't even ask for a credit card, which is bizarre in this day and age. And then under investing strategies, you'll see my name, Ron Brown's, and others. Each person there, especially Ron and I, have a whole series of videos of the market and about the software. Just as an aside, any new users struggling, wanting some help, I have two things I'd be happy to share with you. One is a 6-pack of videos that go through the various buttons and how I use them, and then a vocabulary video and a PDF that talk more in detail about some of the funny names that we use. Just email me at hgsidoc@gmail.com, and I'm happy to send out some links. Stock patterns are cyclical. Funny market we're having today because it feels like, at least it felt like on Friday, that the Nasdaq was crashing hard while the Russell and the S&P are going up. It's an interesting switch in the market. They don't always work so lockstep that everything does the same thing, but such a dichotomy doesn't occur often. And, you know, leads me to think that this market isn't done going up, especially with the strength throughout the market, despite the tech wreck. And we'll also look at what tech did around 2:45 in the afternoon, which suggests to me that this may have been just a market correction in one sector, probably reflecting all the talking heads and idiots on TV saying how overpriced tech was. Yeah, I heard it and I reacted by protecting my portfolio with triple QT, QQQ puts, and we'll look at those perhaps today about why I did those. Based upon where you think you are in the market, you have to change with the cycle. And it is kind of interesting because it looks like we've got another leg coming up in the S&P and in value-based stocks, while the tech stocks and growth may be turning over. So you may have to have different approaches based upon where in the cycle different types of stocks are, which again is a little bit unusual. Get a good picture of what happened on Friday. Notice the financials, XLF, KRE, insurers, broker dealers, they're all green. Notice technology, semiconductors, predominantly red. And if you look at the banks, especially the regionals, you see 2.9, 2.7, 2.9, 2.8, 2.9, 2.67% moves. You look at JP Morgan, 2.65, Bank of America, 3.35. That suggests to me that there's a major rotation and institutional money. And where did it come from? Texas Instruments minus 4%, 3 Triple D minus 5%, AMD minus 4.5%, Micron minus 5%, Applied Materials minus 5%. So there were some major losers on the technology side. Funny thing is, some of my accounts actually made money, while my tech-heavy accounts obviously took some heat. But you can see, except for technology and probably casinos, the market held up fairly well on Friday. Utilities, interestingly, are not showing a lot of strength. And very quickly, if I look at staples, mixed as well. One would think if the market was on its way down hard, that utilities and staples might have shown some more interest. If I look at daily charts, and just for those that are new, E-minis, NQs, and YMs on the top, IWMs because TFs became expensive in the lower left, so this is a ETF, the rest are futures, fixed futures in the dollar. So very quickly on the daily, you can certainly see a big move down on the NQs, but stopping the descent and closing middle of the range right near the 17-day moving average, while the ESs and the YMs look strong, and frankly, the Russell closing at what looks to be a new all-time high with strong volume. The VIX continues to bounce a little bit, but closed near the bottom of its range, and the dollar shows weakness. So even on a daily, looking at the wreck on Friday, we weren't even bad enough in the NASDAQ to get a sell signal, a PPS sell signal. If I look at the weekly charts, again, this is why I'm a little bit still positive thinking about the market. We didn't get close to the 50 weekly moving average. So market still looks strong to me. And then on the Genesis views, you could see on the daily, we did get a sell signal on the Genesis daily, not on the weekly. So the algorithms, because the programs and the languages are different, are a little bit different between the different programs. And you could see weekly charts, and this is E-minis, NQs, TFs, NYSE and YMs. You can see weeklies are up pretty much across the board, as are monthlies. What's interesting is I put stabilize, it's probably the wrong word. I mean, rates still falling. Now, it's interesting that banks stabilized on the week, despite the fact when I look at this, I see that the, that both the 10-year and the 30-year and are falling off their recent move up to test resistance. It's interesting because banks, regional banks, and insurers were all very strong. So maybe somebody knows something, or maybe we did see the rate. I think the rates went up a little bit on Friday. AD lines are strong on both the small, medium stocks and the large stocks. Breadth remains strong but not overbought. Here's a percentage of stocks above the 200. This line here, it's sort of been a resistance line. We moved up a little bit this week. Stocks above the 40 were right in the middle. Here's one that does show some concern that we're getting overbought. The 3-month or 13-week new high, new low ratio. This is one that is getting close to where one expects it to reverse. So even though, again, we had such a hard sell-off in tech, you still see fairly broad-based participation, perhaps broader-based than it was a week ago. The daily McClellan, this is the S&P, the McClellan's figured on the NYSE, so this is not a perfect chart, but we make new highs on the S&P. We finally broke above zero on the oscillator, and the summation index continues to make lower highs but higher lows, so there's some confusion there. But I look at this and say maybe breadth improved a little bit, but breadth is still lagging, and on the weekly, similar picture. The buckets. Again, this is something I describe in my video and PDF on the language, but the buckets basically take all the stocks in the S&P 1500 and imagine that you could divide them up where they are between the bottom and the top, set 0 at the bottom, 10 or 100 at the top, divide it up in 10% fractions, and you have 10 buckets. Add an 11th bucket if you're below the Bollinger Band and a 12th bucket if you're above. Think that 90% of the time stocks are going to be within the Bollinger Band. So what I want to get is an idea if we have a something that is an extreme and likely to revert. On the right, I see that 74% of the stocks in the S&P 1500 are above the midline of their Bollinger Bands. That is bullish. I also noticed that about 21% of stocks are above the upper band. Now, in this bull market, when we get too stretched above the Bollinger Bands, we typically go sideways. We don't necessarily see big reactions to the downside. But isn't it interesting that even with the tech wreck on Friday, we still finish with stocks that are majority, 20% of the stocks or more above their upper Bollinger Band. I did put a number of inferences about the Hindenburg omen on the HGS board over the last 2 weeks. I've done that because I'm a big believer in this. Hence, when I saw on the 31st of March, a second in a row and the third that month of Hindis, we also matched a Hindenburg on May 31st as well. That told me I had to lighten up some of my long positions, but more importantly, start to get defensive. And I got defensive on Monday and bought some TQQs. I bought some volatility. Those worked. I sold a lot of calls, bought a couple other puts that haven't really helped me out too much. And as we're well aware, the market sold off on Friday, at least in technology, and there was no Hindi on Friday. I decided to pop in the NASD instead of the NYSE because I found more references to that, and I'm looking at that as well. Market tone, this is the third column over. We're getting a sense of yellow is chop, green is bullish, red is bearish. And despite the tech wreck on Friday, we still are a neutral to bullish posture on the market. And when I look at sectors, the vast majority of sectors are in buys. Looks like technology, energy, and probably financials are still yellow. So again, overall, compare it to where we were a couple weeks ago, the sector strength has improved. Canaries in the coal mine, boy, does this look just like what the high tech stocks did, and no surprise because this is sort of an extended FANG. Apple, Amazon, Facebook, Google, Priceline, and Netflix, and I added Baidu when LinkedIn got taken out. And you could see that this traded all the way down to the 50 and closed in the lower part, but close to the middle of the range. And we'll look at that on an intraday chart for some of the NASDAQ 100 stocks. Know your news and earnings dates. As I look at this, we have an FOMC meeting and perhaps an expectation of a rate increase. I think it'll be more of a problem if they don't raise. And then you can read yourself jobless claims and employment numbers for the rest of the week. And on the right-hand side, you can see some of the earnings for this week. It's a light week. Dominion Diamond Core has been up 10 out of 10 years. Probably the most strong seasonality of the stocks that I looked at. You can see Finisar, Kroger's, KB Home, Adobe, Lennar. So the home builders are big here. Finish Line, retailer, all reporting this week. And as it says in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Market thoughts. That certainly was a harsh technology sell-off Friday. Was it a shot across the bow of the bulls or just a one-day correction? We'll look at this. Value strong as growth weakens. I want to show you something there as well. Fierce rotation of technology and into banks, money center and regional, insurers, REITs, and energy. Late rally keeps most of strong tech above their 50-day. I think that's important. Perhaps some pressure will be easing after the Comey testimony, which may allow some progress on healthcare, tax reform, and infrastructure. While rates continue to fall despite bullish commentary from the EU, and still expect volatility as Sessions meets this week with Senate committee and Brits figured out who won on election day. Tonight's agenda, typical top-down approach, and based upon time, we'll look at some of my bottoms up. And now on to the charts. I really want to start and look at a couple of different things. First, let's go into TradeStation. Let's go to, as you probably remember, I look at 5 things to get a sense of what each indice is doing, and then I make my decisions based upon that long, short, and the various constituents in the market. One thing I wanted to point out, this is Amazon. And we'll look again at Amazon, but the only thing that doesn't make me feel warm and fuzzy about this pattern is that if this was the end of a downtrend and I saw a candle like this, I would say that's a stopping candle and the stock's going up from here. Problem was we weren't at the end of a downtrend. It's interestingly how we stopped at free parking right on the 50-day moving average. More to follow on the FANG stocks. So let's start by looking at the E-minis. What do we see? You do this to me, don't do that to you. So we see a market that's in a buy signal. It's blue, so it's a little bit less intense of a buy signal. Remember, green means the buying door window's open. I shouldn't be going short. Red means the selling door is open. I shouldn't be go long. And blue says I can go either way. I look at where we are within the envelope. Notice that it hit the upper end and it went sideways. I look at the red dots above or green dots below, looking for evidence of MACD divergence. And I look at the high jump bar, looking for things above 90 to 92. So uptrend on daily, weekly, and monthly. That's strong. Blue, green, blue, I'll give that a passing grade. It's within the envelope. No dots here, though dot showed up on the weekly. Its weekly and daily bongo are green, and its high jump is at 68. E-mini looks strong, no reason why it can't go higher pending the rest of the market. YMs, so we got buy, and buy, green, green, and blue. Red dots there, that shows a little bit concern about potential divergence forming. And you can see we've gone from a high here to a high here, higher high there, and our histogram is lower. That's why you have that red dot showing up. High jump at 59. I think that I don't see any reason why the YMs can't go higher here. The Russells. Russells look strong. Breaking out above the envelope, so that's worrisome. You expect them to go sideways. Green everywhere. Buy, buy, buy. High jump at 55. It does have some MACD divergent dots appearing. And I wanted to point out 2 different ways of looking at the Russell. Let's look at, let's add something here. Let's look at two different instruments, IWD and I can't write, can I? IWD and IWF. So IWD is the value part of the Russell 1000. Anything not to love about this chart? We've got green and green on daily and weekly. We're in a buy signal daily, weekly, and monthly. We're in the midst of the auto envelope. There's no MACD divergence, and we're at 47%. Contrast this to the growth part of the Russell 1000, and you see some of the wreck that occurred in on Friday. And you could see we have plenty of days warning. You could see we were up here above 90% on the high jump, so not a big surprise that this happened here. We were at 100 on the second. When you're at 100% of the highest you've been in a year, you're getting overly extended. And we had a big sell signal come in on Friday, again, pulled down to the 50 and closed up above it. It remains to be seen what's going to happen. Now, if I break this down into intraday, see if I can do it on this chart. And I'll do it on a different chart. So, Russell looks okay. And then I get the NASDAQ. Here's the one that had the big wreck. And again, trade down to the lower envelope, bounced and closed in the midline. Red sell signal, MACD divergence, but still on a buy signal on the longer time frame. And again, we talked about this a couple weeks ago when I said we're like at 100% on the high jump bar. And when you're at 100% on the high jump bar, it usually tells you it's coming down. And it broke. So that was good evidence. And that's kind of why I took some protection, as I mentioned. If we look at the dollar, and see the dollar has been in a downtrend, has a higher high, not yet. So still lower highs, lower lows. The green dots tell me that I've got some MACD convergence. And you could see, even though we got a lower low here than we were up here, we actually stayed positive on the histogram. You can see how low the high jump is. We're still in a sell on the longer term. Be interesting to see if the dollar can move back above the 50. I'll be watching that. And then, actually, is that the 50? I'm not sure that's the 50. Let's see what I got on that chart. Yeah, it's not a 50. Then if I look back here at yellow gold, or YG, you can see gold gave us a sell signal with the strength in the dollar on Friday. So what is my assessment here? Except for the NASDAQ, which I'm not convinced is going to be anything besides a one-day wonder, the market looks very strong. I'm going to pause this for a second and hide my personals. All right, this here is Amazon on a 5-minute chart. And you can notice that it had a major drawdown to a low of 927 occurring at 240 or between 245 and 250. That is a major move, and you can notice on huge volume. And it held, it closed up on that bar for a green bar, and that sort of suggests to me that perhaps if that's a common pattern, that maybe the bottom is in. And in fact, if one looks at a 1-minute chart, you can see the exact time was 2:49 p.m. So I'm in my car and I watch my net change for the day make a huge change around 2:50 to 3 o'clock. I pulled off the road and I dumped my TQQs. Take a look at the TQQQ as an example. Remember, I did puts on this, so I made money when it dropped. And you could see a similar time frame, 250, that a bottom here and a reversal. If I look at Google, I look at Apple, occurred a little bit earlier on Apple, not really about the same time. If I look at Netflix, I look at AVGO, I think there's a clear pattern here that the market put in at least a temporary low at about 2:45 to 3 o'clock on Friday afternoon. So I think what I'm going to do, just look at the cues. I look at the cues. There we go. You put a low at 138.09, and if the market trades and closes on a bar below that, get out of the market. I think that's what I'm going to do. I'm going to look at my lows of the day. I don't want to violate the lows of the day, but I think I'm playing for a bounce here. So take a look at my HGSI. So I like looking at Woodward and Brown user groups, major markets plus. Put the top down view so it's all price and volume and see what comes to the top. Interestingly, the market got painful, yet small caps, mid caps, NYSE, Russell 2000 are up at the top. At the bottom is the pain. Semiconductors, the NASDAQ 100, the NASDAQ composite. You could see that on the day, semiconductors were down over 4%. Take a look at some of these. We'll start with the S&P 500. To this view. So take a look at weekly bongos are green. That's very bullish. Daily bongos are a short-term indicator. According to HGSI, the last Hindenburg was May 4th. Now, I think there was one May 31st. And as I tried to communicate on the board, there's been changes in how in the different NYSEs that we're getting, and whether I use all NYSE or bar charts, and that might reflect some of the differences there. I know that May 31st, there should have been one, and it was published in a number of places that there was one. But if you look at this, how can you not be bullish? You're above the 8-day. Yes, you had a wide swing on Friday. I'm still bullish on the S&P. If I look at the Dow Jones Industrials, it's closing high. New closing high, breaking out here on volume. Everything's green. Gotta like those. Let's look at the Russell 2000. Again, we looked at growth versus value, and we had a new high, although we closed at a looks like at a new closing high on the Russell on Friday with a kahuna and all green above. Again, how do you get bearish on that chart? And lastly, we look at the NASDAQ. And again, with all the pain, look where the NASDAQ ended up. It ended up closing on the 17. It didn't get down to the 50. Let's just look at this. Do you see a pattern here? Some big one-day pulls down. You know, this was 1.82% occurring in March. This one was 1.8%. And yes, we nibbled around the bottom before we took out new highs. 0.9%, 0.9%. Here's 2 days, 1.0, 1.3. The market went straight up. Here is a 2.54%, and then the market recovered. So what do I expect to happen on Monday? If I was a betting man, and I'm not saying I am a betting man, I'm going to give myself a green candle and say I wouldn't be surprised to see a market do this on Monday. That would be probably my most likely scenario, that we test the lows and move up on it. And I'll be watching intraday to make sure we don't start dropping below the prior lows. I think, to me, that is the most likely scenario. And then we probably go from here a little bit sideways before we break out to new highs. To me, that's what this feels like. Obviously, the bullish case or bearish case would be that we open up high and we close below, in which case I think it's a natural that we get down to the 50-day moving average and then basically flat line here for a while. You know, a really bad one would be if we move all the way down to the 200. I don't expect that to happen. And then the third possibility is, and we're just going to make that yellow, that we just don't do much of anything and we just trade in some little boxes for the next couple of days and ultimately go sideways. I don't think this market is going down to the 200-day moving average. From the close to the 200-day moving average, it's like it would be pretty bad. Let's just say it goes down this far. It would be a 9.3% down. All right. Not usually the end of the world. From the close to the 50 would be closer to another 2.5%. So do I think the 50 is in the cards? I think there's a good chance. And then we bounce from there. Maybe we hit it close to the open on Monday. I don't want to see a gap up and a move up because that's likely to crap. I'd love to see the stock open down and then close higher on the day, somewhere in the mid-range of Friday, and then move on to new highs. So the NASDAQ, yes, it does look kind of worrisome, but you know, when you're stopping at the 17-day moving average, it's hard for me to say that this is very bearish. And then lastly, I think we looked at the Russell already. We did. Let's take a look at the dollar. We talked about the dollar bounced a little bit on Friday. You could see it's had a little bounce at the end of the week. And with that occurring, 5%, not really. Let me try that again. From low to high, about 1% move. No surprise if there's strength in the dollar, then one would expect gold, which I'm still not in, to be weak. Gold, I thought about getting in last week, pull back. Gold miners have been underperforming the gold itself. It's still failing at the 200, and silver has been weak as well. And then we did see a rebound in oil stocks, and we take a quick look at oil. Oil bouncing on the bottom, that kind of looks like a lot of the exploration plays. And then just lastly, if we look at the VIX, VIX had some wide swings, but cannot get close above the 50 or the 17 days. So if anything, I'd say the VIX was stable. So I'll go back to my original premise, which was I think this is more a shot across the bow, and I think we have a couple days of sideways before we start going up again. I'm not believing that this is the end of the bull, but that's just my thought. Remember, I'm the guy that still has a little bit of TQQ left. I took most of it off. I still have some puts on. I still got some calls on most of my positions, all buffeting the pullback on Friday. If we go down to 07 and see what is working, Major Markets Plus and the industry groups, we'll see with retail, banks, trusts, industrial, PC, property and casualty, jewelry, investment management, life insurance, REITs. So when you see banks, a bunch of insurance companies, wealth management, and REITs, it's an interesting picture there, and it makes you wonder what's going on with interest rates, and maybe they're going to go up this week. Let's see what we got here. Other retail, Office Depot, and Sally Beauty. Let's go into that's a beautiful chart. So here we have a stock that traded off up the bottom, huge cup handle, breaking out here with two kahunas. Office Depot, that looks pretty impressive. It's got earnings coming into the chart. That might be a retail stock. It's kind of cheap for me to look at. And Sally Beauty Holdings would be sort of a bottom fish Did have some pocket pivots in the Kahuna, but it's way below the 200. I'd probably pass on that. But this has got strong group strength. The weekly bongo went green, so it's not that bad looking, but that'd be kind of bottom fishing. That's one group. Next group down are banks. Um, and I mentioned that regional banks look strong, and these are some of the regional banks. Did you see the price change one day, all those 3%, 4%, and 5%? It's a very typical pattern here where they had a big up move, pull back, and then have moved up off the 50 over the last several days with multiple kahunas, pocket pivots. The weekly bongo went green. This is Wintrust Financial. Pinnacle Financial Partners, same thing, moving off the 200 and the 50 with kahunas and pocket pivots. Legacy Texas, same pattern, breaking out. BNC Bancorp, Sterling Bancorp, Barris Bancorp, excuse me, all with a similar pattern. Hancock Holding, I like this one a lot. Sideways, breaking out, mobile breakout squeeze, pocket pivots, and kahunas. Clearly something's going on in the banking stocks, and sometimes I just buy KRE, which is a regional bank ETF, and it should look pattern similar to everything else, which it does. Third group down are trusts, fiduciaries. Don't know anything about some of these. Some of them have nice dividends, but very quickly, Bank of New York, Carnegie Mellon, BNY, they actually have a bunch of my money. They pay a 1.5% dividend. Same pattern, sideways for some time. Pocket or kahunas, mobile breakout from a squeeze, bongo change on the weekly, breaking out. All these look very attractive to me. State Street, similar patterns, already moved a little bit, bunch of pocket pivots. And lastly, Northern Trust, again, same pattern, and then a breakout on Wednesday with a couple of kahunas. Bongos turn green, 1.7% dividend. Fourth group down are industrial distribution and rental. A different group than we usually look at, but similar pattern, uptrend sideways, off major support, pocket pivots and kahunas. United Rentals, pull back to big support. I'd like to see it break above the 50, but you had a kahuna coming in off the 200-day moving average. Watsco, breaking above the 200. Don't like that one that much. And this is a big bottom fish. Wealth Management, another finance company. All these look good. I just don't like their earnings growth. The Charles Schwab Company. You've seen this pattern before. Pull back to support. Kahunas, pocket pivots. Like to see the weekly bongo go green, but that looks great. TD Ameritrade, pretty much the same pattern coming off the 200. E-Trade, same pattern as well. Next group are P&C Insurance. Now, mind you, almost all these do better with rising rates, so something's going on. Berkshire Hathaway holding Class B. I don't want to be a broken record. Uptrend, sideways, off support with Kahuna. Kemper Insurance. Hartford Financial Services Group. Berkshire Hathaway Part A. Assured Guarantee. All have a similar pattern as the regional banks, which is they've been going sideways for quite some time. Now they're breaking out. Jewelry and watch stores, not usually my favorite. Signets, I made a lot of money on the short side from about 130 down. Let's take a look at this on the weekly. Well, you can't see it here, but it's in a huge downtrend. Now it looks like a reversal. Here, I don't think I'll be chasing that one. That's it in that group. Don't know why that's up so much. I guess it must be the amount of price change. Number 8, investment management. Again, another financial. Many of these pay big dividends. And again, this is a very loose pattern, not that exciting to me, but pays a 7.9% dividend. Waddle and Reed, clear downtrend, broke above the 200 here on pocket pivots, kahunas, pays a 10% dividend. Invesco, breaking out of a Darvis box, perhaps here, 3.4% dividend. BlackRock broke out about 2 weeks ago, pays a 2.4% dividend. Westwood Holdings, looking like it wants to break out here, pays a 4.4% dividend. Something's going on with interest rates. REITs, these don't like high rates. Let's take a look at a couple of these. I do like the third one down. I know that made my buy list. LaSalle Hotel Properties, uptrend sideways, breaking out here. Like to see the Bongo Green, don't like the earnings per share growth in the second quarter, 5.9% dividend. Hudson Pacific, sideways, breaking out above support. Bongo here, huge earnings coming in, 2.8%. That looks interesting. Geo Group, a little bit tighter pattern, uptrend sideways, breaking out from the 50-day moving average with green Bongo there. Good earnings per share growth and a 5.6. This made my buy watch list. Let's just see what this looks like on a weekly chart. And on the weekly chart, you could see a pullback, pocket pivot, kahuna on the weekly, and new weekly Bongo. So this is one that made my buy watch list this week. This is Geo Group. And then lastly, in the top 10, another financial stock, life insurance. We'll just go very quickly because I think there's some buy opportunities in here as well. Here's Aflac, slow grind up, and then a big day on Friday with kahunas and pocket pivots. Lincoln National, pulling back to the 50, broke out on Friday. MetLife broke out on Friday. Prudential broke out on Friday. And Uniprovident broke out on Friday. Again, I'm just a doc, so I don't get everything, but something's screwy or something's telling us something when we see 1, 2, 3, 4, 5, 6 out of the 10 stocks, or the groups in the top 10, are groups that would have a benefit if insurance rates went up. Maybe it's just because they're meeting this week. What was to the downside? Semiconductors. And if we look at these, you're going to see the same pattern over and over and over again. Big pullbacks and then pull something back before the day closed. Traded down to the 17, closed above the 8-day. That's NVIDIA. Micron. Traded to the 17, closed up right underneath the 8. AMD. Traded down near the 17, closed above the 50. AVGO closed on the 17. AAOI, deep pullback, closed between the 50 and the 17. So you could see a lot of wreck in the semiconductor group. Infrastructure, so the cyberwares of the world. ServiceNow, this one got hammered. Came down with the technology stocks. Pulled down to the 17, closed up off its lows. This one just looked horrible throughout the day, CTXS. So it's interesting, it closed, traded up in the after hours, but it didn't have its reversal until nearly 4:30 on Friday. That's CTXS. Palo Alto, traded down below 200. Fortinet, Red Hat, all these were hammered pretty bad. What else is on this group of losers? Semiconductor manufacturing, app software. Boy, look at this. How many of these are technology? 1, 2, 3, 4, 5, 6, 7, 8, 9 technology of the first 10 stocks. Biotech had up and down periods of time. I think biotech matters which stock you're in. Go through the first 3. Regeneron had a big move over the last couple of weeks. Gave a little bit back on Friday, but still in a nice uptrend. Exelixis pulled back going into ASCO, hasn't really rebounded. And Coherus had a tough day on Friday after a strong day on Thursday. Coherus has had a date where sometime after 5 p.m. on Friday, the company should have been notified by the FDA on their new drug application for a biosimilar pegfilgrastim. Neulasta is about a $4 billion with a B annual drug for Amgen. This will be the first biosimilar for that product. It could be $1 billion plus product, which means it's going to hurt Neulasta sales by $1 to $2 billion. And this will have impact on both companies. So there's a couple of things that we're going to learn. We are going to learn Friday whether or not this drug was approved or not. I think it got to the company after hours, so they'll probably release it sometime tomorrow morning. Let's just make sure nothing came out late. If the drug is approved, let's see, let's look at the news. Notice this comment there, volatility is surging. So let's just go into think or swim. Let's just look at the options on this. So if I look at options, for 5 days, I've got 346% volatility. Look how the volatility drops going forward. And it's expecting a plus or minus 7 move this week. And this is all about the drug approval. So options are clearly expensive. So the first thing we're going to hear about is whether or not it gets approved. If it gets approved, you expect a pop at least up to the $25 range, in my opinion. The second thing, there's a Supreme Court that is looking at a prior issue which causes a 6-month delay from the time the biosimilar is approved after all patents have expired before they can launch. They have to wait until everything's expired, get approved, and then notify intent to launch of the original company and give a 6-month window. So this could be a very telling stock this week. I am long, but I had bought a long call and sold a short put, a bull put spread for credit to pay for my long call, and I covered the put spread for a profit because I didn't want to risk a big move down against me tomorrow. Here's Amgen, lot better looking stock chart. It's above its moving averages, breaking out above the 50. Celgene is another big one here, also looking a little bit better of late, stabilizing its drop. And as Gilead hit a bottom, who knows? Pretty ugly chart. One way to play this is something like LABU, which is a 3 times ETF. And you notice biotech held up fairly well compared to the other technology in the market on Friday. So we've looked at some of the things that I think look good, look bad for the week. I showed you a couple things I like. Let's take a look at my buy watch and see what else I could tell you. So I went through 600 to 700 charts. I looked at a bunch of scans, and these were some of my favorite stocks that came up. And the TQQQ, I did that mostly to review. So let's take a look at these by what they are. Banks. A lot of banks. Let's just go through some of the banks that I liked. Here's Bank of the Ozarks. And, the pattern's the same. Just find one you're familiar with and you like. Pull back to support, pocket pivots, kahunas, mobile breakout from a squeeze. Don't like the fact the weekly bond goes red. I think this one goes higher. BB&T Corp, very similar story. Bofi Holdings, ditto. Comerica already breaking out. Fifth Third pull back to support kahunas. Here's the red weekly bongo. These are all stocks that I liked. First Republic, this one's already breaking out. Hancock already breaking out. KeyCorp breaking out. New York Community Bank Corp. This one I found intriguing. It's turned green on the weekly bongo. I'll be the first to admit it's in the midst of a very horrible downtrend. Yet it's had three kahunas in the last 2 weeks, a couple of pocket pivots, closed above the 50. Bongo is green, pays a 5% dividend. And then what else is here? Private Bank Corp, tight looking chart breaking out here. And Sterling Bank Corp. So you think I like banks this week, and then Texas Capital Bank shares. I love the banks this week. Something's clearly going on in the banks, and there were a lot of banks to like. I missed Zion's Bank Corp. This is another one I liked. Again, that same kind of uptrend sideways breaking out. So the banks looked good. Diversified banks. I even like Bank of America, JP Morgan, and Wells Fargo. I was renaming Bank of America like JP Morgan bought them. And it's that pattern of a sideways consolidation, drifting down, sitting on major support, and getting a pocket pivot at kahuna. So I think finance stocks look strong. Exploration and production. You see a bunch of them there, as well as integrated oils. I'm not going to run out and buy energy, but energy looks like it's firming. So I could look at exploration and production stocks. And see ugly downtrends with earnings coming in weak comps. Callan, same thing. EQT, same thing. Newfield Exploration, same thing. So I'm just putting a list together of stocks that I might want to be. This one looks a little bit less down in its pattern, Rice Energy, that I might be interested in if energy continues to firm. Now, I have to admit the exploration production stocks look awful, but what if I move down to some of the integrateds? So I've got Chevron Corp, a little bit similar pattern, Kahuna, 4.1% dividend. ExxonMobil, breaking above the 50, Kahuna, it is green on the bongo, 3.8% dividend. And then I've got the refiners that look stronger than I think than the exploration or the integrateds look like. So somewhere in here I'll see my refiners. How about if where'd they go? There's Marathon Petroleum Corp, up, sideways, breaking out with kahunas galore. Everything's green, 2.6% dividend, great earnings coming in. And then Tesoro Petroleum, which has a name change coming out, also breaking out, 2.4% dividend. So banks and energy dominate. Steel looks like it's moving rather than something like U.S. Steel. How about something like Nucor? Sitting right around its 50 as it's had for a while, right below PSA dot. Kahunas and pocket pivots occurred on Thursday, moved up again on Friday. This one looks interesting. Great earnings per share growth coming in. And then on the life insurance, as we saw, that was a strong group. These were some that I liked. Fidelity and Guarantee, I think, is a takeout, so skip that one. ING US. This is the pattern we're seeing. We're seeing pullbacks to the 50, lots of kahunas, no dividend, but this one has, I like those kahunas. And then I've got Manulife breaking out above the 50 with kahunas, 3.4% dividend. And then we have Target. Is this done going down? Well, you got higher highs and higher lows. So I guess you could say it looks to me like just maybe we're in a new uptrend. Obviously, this is a high risk position. It's clearly a downtrend. It's below the 200-day moving average. It pays a 4.2% dividend. Um, I like it down here. If remember what I said in the beginning, I growth looks or value looks good. Growth looks like it might take a breather. This would be considered a value stock buying target down here. What else do I want to show you? We've looked at a lot of different things today. You're probably getting tired of hearing me, and God knows how long this is going to take to upload here. Where do I get all these picks? I use a lot of different sources, but just to show you a way to make your life a little bit easier, just go into the smart groups, and you can look at them whether they're in a window in the warehouse or in the designer, and you'll see a number of names here. Here's my name. You want to find what's working, pull back to the 50-day moving average with a kahuna. So by definition, every one of these stocks, ranking by best, should be a stock that is an uptrend, pull back to the 50 and have a kahuna. Kind of an uptrend, pull back to the 50 within 1% of 50 and it had a kahuna. Not a great example. Rice Midstream, pretty good example. Uptrend sideways at the 50 with a kahuna. So Matt Kelly, here's a REIT that I liked, sitting on the 200 pocket pivot and kahuna. So this is one place that I find a lot of the stocks I like. Here is squeezing with a close to a PSER reversal. See if there's anything here that I know I liked. Here's Envision Healthcare. It doesn't look too hot. This is looking for stocks that are squeezing. Price is right below the PSER dot and had a kahuna showing momentum. We did see one of these earlier. That was Nucor. I love a stock like this. Let's just talk about how I might trade Nucor on Monday. So I'm going to finish with this example, but let's open up a text box. All right. So it closed. Let me pull up this. Closed at 59.79. The PSAR dot is right above that at 59.86. Then you got 60. So I'm going to put a buy signal at 60.05. So we're going to do a buy 60.05. Let me go put back up to this and I'll put a buy stop somewhere up here. Where am I going to put my stop? I might put on the low of this bar of this day. The low here is 56.48. All right. So I'm going to put my stop at 56 and 40 cents. Let me see what I should look at. All right. So I'm going to put my stop right around here. I am risking 3.65 cents, which is approximately 6%. And why I like this trade are several things. One, this trade won't be filled unless I break above that PSAR dot. So if the market opens low on Monday, it will not get filled. I also know because of the Wells Wilder trading system that there'll be a number of people whose automated systems will go long when that PSA or dot is taken out. I've set my stop rationally at the lowest bar in the last 4 days, which happens to be right below the 200-day moving average. I certainly don't want to be in the stock if it trades that. I'm risking $3.65 on the trade, or 6%. And if my risk capital allowed me to lose $2,000 on a trade, I could buy about 680 shares. That's pretty good. So for that $2,000, what else could I do? So let's go into my Thinkorswim. And let's look at Nucor. Okay, and let's look at an August. Let's look at a July strike then. And let's just look at a single. So I could buy, my buy is at 60. For $1.81, I could buy a $60 call. Now, what do I know about that $60 call? Let's see if this will work. All right, let me do this. Hold on. All right, I'm going to stop this and I'm going to pull something else up. Okay, remember we were looking at Nucor. That happened before. Oh, that's why. We're looking at Nucor, which is trading at about $60 a share. And what we looked at was we looked into the option chain. We looked at the July 40 days to expire and said for $1.81, I can buy a $60 call. So let's just look at this. So let's go into Nucor. Hold on 1 second. Here we go. Spread Nucor, July starting price. And we're going to be bullish, so we don't want to bear. I'm going to look at a bull call spread, a bull put spread, a long call, a long stock, and then I'm going to build my favorite position. So these are the 4 trades that I could do. I could buy 100 shares of stock for $59.79, and it's going to cost me to buy that stock. It's going to end up costing me, well, it's not cost me zero. There's no bid or ask. It's going to cost me about $6,000. I could buy a long call. One long call will hold up P times 100 for somewhere in the $1.80. So for $180, I could control 100 shares of stock. So I could pay $6,000 to buy 100 shares, or for $1.80 times 100, $180, I can control 100 shares. Now, if the stock goes up, what this shows you is I make money. But because I'm paying $1.81 for the right, but not the obligation, to buy Nucor for $60 a share, it's got to get above 61.76 before the 3rd Friday in July for me to make money on that trade. You notice this flattening here, it tells me the most I can lose on that trade is $185, $175.50. My profit is infinity. I love this trade. The only problem I have with this trade is I got to put $175 in for 100 shares. A bull call spread, let's look at this one here. This one would be buying a call at 60 and then selling a call at another price. So let's change that spread and let's say we're going to sell a $65. I want to edit and I make that a $65 call. So now what I'm doing is I'm saying I'm going to buy a $60 call for somewhere around $1.81, and I'm going to sell a $65 call for $33 or for 33 cents. And now if I look at, how do I close this? All right. If I look at what I end up with is still the maximum I can lose is no longer $185 or $175. It's $139. That's because I collected premium. But now I've limited how much I can make because I sold a call against it. I don't like that trade. All right. What about doing a bull put spread? So I'm going to sell a close put and then buy a further put for protection. The closer put being more expensive, so I'm going to put money in my pocket. So if I did this, the most I can make is the amount of money I put in my pocket. So I'm selling a $60 put for somewhere around $2.28, and I'm buying back a $57 50-cent put for $1.21. So I'm risking $1.07 to make $2.50. So net, my maximum risk is $143.50. My maximum profits are $106.50. My credit's $106.50. So I look at this trade and I go, nah. Why would I want to trade where I have no opportunity to make, for a big gain? So what I like to do, and what the trade I'll probably take on Nucor will be this trade here. I'm going to add an option leg, and I'm going to buy a $60 call. I'm going to drop that thing down to 55. I'm going to hit OK. Now, this looks just like owning the stock on the right, but I've capped how much I can lose on the left. So when we started here, I was willing to lose 365 on 100 shares. So that means I'm willing to lose before I make a stop, but no gap protection. And I had to pay out $6,000. But if I do I call it my chicken synthetic, I'm going to buy a 60 call, sell a 60 put, and then I'm going to buy back a 55 put. So what I basically have done here, and I'm going to get paid $5.50. Or that's not a bad deal. No, I'm a debit. I'm going to pay $5.50 for this total, not per share. So my risk here is I can lose $550. Risk 505.50, and my opportunity is infinity. So I look at the options here, and this is what I'm going to do. I'm going to buy a July 60 call. I'm going to sell a put spread, selling a $60 put and buying a $55 put. My break-even price is a little bit over $60, so I need minimal move to break even. And as long as it moves up, I make money, and I've capped my risk to the downside, and I have very little out of pocket. So this is a trade that I'm interested in taking, and this is how I do my evaluation, coming up with what am I willing to risk, comparing this trade where I risk 500 versus 365. So you add in about so I'm probably putting about 9% risk versus 6% risk, but have no money out of pocket or minimal money out of pocket. And that's one of my favorite trades. The downside of this trade is it's going to take some margin um, as insurance to the bank that you're not going to go broke on this trade. On this note, the other thing I wanted to look at is I wanted to show you something cool. I'll go into my trade station, and I think it was Amazon. Let's see if it's Amazon I want to look at. Yeah, a couple of things. I'm trying to think which was the one that really had the best picture. I'm going to look at see if I can find the one I wanted to show you. But basically, Amazon did get a person sell signal come in on Friday. No shocker on the daily. It's still in a buy signal on the weekly. This is a trend line that's automatically driven by the program. And I thought it was kind of remarkable where it actually traded down and closed above its trend line. But one of these, let's see if I can find it. I guess this is what I wanted to show you as well. As we think about what the Nasdaq's going to do this week, I could be doom and gloom. It's all over. We're in trouble. It was clearly a bad day on Friday, but it pulled right down to the trend line and closed above its trend line. I think we've got to see another day or two before we get all freaked out about the market. Let me just bring over a couple of symbols, and I want to say goodbye after that because you're probably getting just as tired of me as I'm tired of talking. I actually have a program that automatically does trend lines. I listened so much to Harry Boxer, he convinced me that trend lines were a great thing. The NASDAQ. See if that's what I was thinking of. Again, the NASDAQ pulling right back to the trend line, closing above it. I think that trend line is important to me. I'm going to be watching that. As I said earlier, it wouldn't surprise me to see us open up lower and close up on the day. That trend line, to me, is a line in the sand. Some people might put their line in the sand below the low of the day. So on that note, let me just take you back to my buy watch list of the things that I liked. And then say thank you all for watching. And just one aside, if you like this, your best way to watch this is to go to YouTube and download it to your computer. But when you're at YouTube or in HGSI and download it, in YouTube, if you subscribe to me, I get nothing. I'm too small fry to have advertising. But if you subscribe to me, then every time I post a new one, you're going to get a message so you'll know it's there. Goodbye, everybody. Have a great week. And from Bar Harbor, Maine, the beautiful sunshine,